So we have seen interest rates shooting up literally like a rocket ship across all countries and economies. It's been a global phenomenon in response to runaway inflation, which has been rampant. Again, this is not just a Canadian story, but this is all across the global financial system. And what's really important to understand is we're starting to get to a threshold where in some countries, these rate increases, these dramatic increases, sometimes unprecedented increases, are really starting to have an effect in certain economies more so than others. And we have here in Canada, similar to the UK, a financial system whereby the terms do not extend past 5 years, versus a country like, or financial system like they have in the United States, where they stretch out as far as 30 years. And so all of these hikes and all of the pressure that's being built up as a result is going to be felt much more quickly in countries and economies like Canada and the UK versus in the US. It's going to take a lot more time for this to work its way through. And so we're seeing a much different response coming out of the Fed than what we're having here with the Bank of Canada and the Bank of England in terms of how they may proceed in the future. And we may start to see a bit of a divergence. So the real issue is in Canada and even in the UK, are we actually in a recession or are we likely heading into one? And what impact will that have, both long and short term, on the Toronto real estate market? My name is Ralph Fox, and I am the co-founder and broker of record of Fox Marin Associates. We are a boutique residential real estate brokerage located right here in downtown Toronto. Please be sure to comment if you have anything constructive to say about this video today. And if you are enjoying any of the information or discussions we're having, please be sure to hit that like or subscribe button. Okay, so let's talk about the dreaded R word, recession. Now, in order to have a discussion about recession and whether Canada is heading into one, is in one, whether it's going to have no landing or a hard landing, what really matters here at this point in our conversation is to talk about what is the definition actually of a recession. And the standard classic layman term definition is when you have two back-to-back quarters of a contraction in GDP, in gross domestic product. Now, one of the things when looking at Canada's GDP is to understand is that we have had a tremendous amount of immigration. We're over 1 million people. That's a 2% population growth over the course of a year. That's a lot for a very small country. And so when you have all of these people coming here consuming and producing, it can actually mask what is happening underneath the hood of a country's economy. And so if we look at the real GDP per capita, what that story is telling is we have been in decline for 4 straight quarters. So on a per person basis, we've actually been in a recession for at least 6 months, maybe even a year. Now, what's interesting is the GDP for the country has actually contracted now in the last quarter slightly, down 0.2%. So we are showing signs on multiple levels of our GDP slowing down, which would indicate very much that we actually are in a recession. Interestingly enough, the Conference Board has come out with its most recent report, and it's showing that consumer confidence has now dropped to its lowest level since the depths of the pandemic. And so there's very much a negative mood that's out there. And there's a very interesting chart here. And I think I want to share this chart because it's from OpenTable. And really what it's showing is the dramatic drop in reservation bookings for restaurants. And as we all know, it's really expensive. And this is for Toronto. And as we all know in Toronto, it's really expensive to go out for dinner. And so one of the misnomers has always been, well, if all of these interest rates are going up and the economy is contracting, how is it that people are still going out, and restaurants are still busy, and hotels are still busy, and flights are still busy? And it's starting to show, as of June, a massive or significant contraction in people actually going out for a $500 dinner, which is becoming more and more out of reach as credit continues to tighten. So that's a really interesting chart to look at. And I think one of the things that we all have to be aware of is that, the idea of a recession can very quickly become a self-fulfilling prophecy. So if we look at consumer confidence, if we look at resources like the one we just shared with the open tables chart, and then we look at more standardized economic data when you talk about GDP on the national level or per capita, we really, really, really are starting to contract, and we're seeing that move through the economy in all kinds of capacities to indicate that we really, really are slowing. Now, what's really important in this conversation is to give context or greater context into this financial environment that we're all trying to navigate our way through, because this really is, at least in our lifetime experience, something that's been unprecedented. So this report that was put out by Bank of America has in it this graph, which we're going to put up in a second, which shows the 5,000-year history of interest rates. And what this shows is that interest rates were literally at a 5,000-year low over the last decade, according to Bank of America. And right now, we are sitting at around the 5,000-year historical average. Now, things to note here is that rates have been rising at nearly the fastest pace ever in history. Number two, many people, anybody certainly who's watching this, has not experienced inflation this high, nor interest rates at these levels in their adult life. And number three, this is why rising interest rates are coming as a shock, combined with huge, massive debt loads that individuals, companies, and governments are carrying right now. And that the end of really super low interest rates and free money has come to an end, at least for now. So this is all something on various levels as individuals or collectively that we're all having to come to terms with. And the real question is this the end of the world? And if you go back to the context of the last 5,000 years, is what you'll see is that everything economy or financially related happens in cycles. And this is just part of the cycle that we're going through right now, which is the inflation and the high interest rates, which was really caused by this decade low interest rates and in tandem with an influx of monetary stimulus and printing going into the economy. And so what's happening now is the cycle is just playing itself out in real terms, and it's just happening at a greater degree and speed with which something that we've ever seen before. But it doesn't stop that from being a cycle. And as the saying goes, this too shall pass. And one of the things that, I find very interesting in life is that sometimes the anticipation of something negative happening is actually worse than the experience. I have a certain amount of personal relief that I'm sharing here, that the anticipation of a recession happening versus, okay, now we're in it, understanding that this is a cycle and this will pass, I think is very helpful to the average person's psyche as they're trying to navigate their way through these massive financial swings that we're living in right now. Now, the question is obviously, well, how long will this last? So there's some pretty good data that's been put out by the big five banks and national banks, so the big six, as we'll call it, calling for an end of the cycle and reductions by mid-2024. So all banks at this point are all on board, not only noting that there's a contraction in the economy and that we're probably in or heading into a recession, but that they are all anticipating by mid-2024 interest rates to start to come back down. And we even had TD just recently released a report where they went so far as to say that by 2025, mid-2025, they're expecting interest rates to be back down to 2.5%. It seems like we're moving through the eye of the storm right now, hopefully. And of course, there's a lot of conversations, hard landing, soft landing, no landing. But I think the consensus is that we are in a contraction now or heading into one. And the way economic data works with the lag is oftentimes you won't even know that you're in a recession until the data comes out 6 months down the road to say that 6 months prior, the time we're having this conversation, that we were in a recession. Canadian economy to get back on its feet next year, according to Deloitte, and they recently put out a report saying that we will pivot from high interest rates and the high inflation that we're living in by mid-year as well. So there seems to be a lot of thought and data and economists now starting to say that, there is light now at the end of this tunnel. And whether it's mid 2024 or 2025, it's really good to know that a lot of the consensus is starting to formulate around us coming to an end of the cycle at some point in time, and this will inevitably pass. And it's kind of feeling like in this moment that Toronto real estate is passing a kidney stone. So what does all of this really mean for the next few months? We can look back at, I was in the business when Lehman Brothers went bankrupt and the subprime crisis happened. And really what Toronto went through at that time was the market flatlined for about 6 months. Everybody just hibernated, and then everything just shot right back up in January 2023, the beginning of this year, when the Bank of Canada paused. Prices shot back up. Really, I think what buyers and sellers are going to start to look for is some stability and predictability in the market, which just isn't here and probably won't be here over the next 3 to 6 months. We have seen inventory levels creeping up, which is a great relief comparative to what we saw in the spring. And even though we saw a lot of great price gains in the spring, this fall, I'd expect all of those to be erased. This will be a more of a slower time in the market, probably one of the slowest fall markets I've ever seen, both in terms of buyer activity and seller activity as well. I think what will happen is once condo owners see that there's 7 units for sale in their building, they won't put their property up for market. And I think people will start to pull back who don't absolutely have to sell. And so we could see the elasticity of supply starting to contract a little bit once people sense that there's definite slowing in the market. So very interesting time. It's really hard to predict month to month what will happen. As far as October 25th, the market is 50-50 whether there'll be an increase in the next Bank of Canada announcement at the end of September. So that's another wait and see. But even those who are predicting that there could be an increase or who are espousing an upcoming increase, everybody seems to feel that if there is one, that probably will be the last one. And so once we return to that base level of stability, we definitely can expect market activity to pick up and transactions to resume in the way that we know the Toronto market to behave. So we're definitely in for an interesting 3 to 6 months. I don't think that this will go on forever, nor do I anticipate a huge drop in prices, but there's definitely going to be negative pressure on pricing across the board. There'll be some great opportunities if you're a buyer and you believe, like we do, in the long-term viability of the Toronto real estate market and its projected pricing trajectory once we move through this. And so it's really just a question of being really smart out there, getting really good advice if you're thinking about buying or selling. And, our biggest recommendation is to always think long-term, to always look at the fundamentals. Do not do anything reactionary, make a decision to put a property on the market out of fear. It's really not the time to be acting out of fear. You really need to be measured in how you move forward so that you can make the best decisions to set yourself up for the next leg of the cycle. It will happen, the next leg of the cycle. Nobody knows exactly when, but it will come. So hopefully you have enjoyed this conversation. And if you have any questions, please be sure to write in the comments section. And we would absolutely love to hear from you. Please be sure to smash that subscribe button. And we hope to see you at our next video.